Mark Reichman. I'm a senior research analyst at Noble, and it's my pleasure to introduce Mr. David Stein, who's the President, Chief Executive Officer, and a Director of Kuya Silver. And following the presentation, we'll probably have about 10 to 15 minutes of Q&A.
Okay, thank you. Thanks, Mark. Okay, thanks everyone for coming. So we are a silver producer. We're publicly traded. There's our tickers right there. We trade in the US here on the over-the-counter QB market. Kuya F is the ticker. So that's the important one for you guys. We have two assets, but our flagship is our silver mine in Peru. So we have, that's what I'm going to spend most of the time talking about is Peru. We do have a really great exploration project in Northern Ontario in a famous silver mining camp as well. So, and we are actively drilling there right now. So we generate a lot of news from the production at Bethania and also from the exploration in Northern Ontario. We have a business model that's very, I mean, it's not unique, but you know, the vast majority of the kind of junior or micro cap metals related companies that you see do just pure exploration and hope that someone buys them out. We actually have a real business model. We put mines into production. We've done our first one with Bethania, and we grow that, and we try and get as much organic growth through the cash flow of that mine as possible. We've got a great pathway for that. I'll show you in a second. But the path that we're following is very similar to, you know, some of the famous silver mining companies that are listed today, like First Majestic and others, even going back to Pan American in the 90s. They all started with one single mine. It's usually in Peru or Mexico, because those are, you know, the two of the biggest silver producers in the world. And then with these high-grade vein mines, it allows you to grow with not a lot of capex. You don't have to go and do a $300 or $500 million capex. You know, the capex is single-digit millions to tens of millions. Now, a really exciting opportunity for us is being revalued as a silver miner. There's very few out there that are publicly traded. So I'm actually a former equities analyst myself, and I went through the universe, and I count only 10 companies that produce more than 50% of their revenue from silver. Okay, and most of those companies, and especially the ones that are profitable, they are worth $1 billion and up. So they're very, very valuable companies, we're not quite profitable yet because we just started the mine about a month and a half ago was our first sales, but we're going to get there next year, you know, as early as possible in 2025, and at that point the revaluation potential is huge. I mean, even if we get the worst multiple of our peers, you know, you're still looking at a 7 or 8 bagger from where we're trading today. So, you know, not promising anything, but definitely we have the potential there, and that's very exciting. We've got a lot of catalysts because we do exploration and we have the production track as well. So as we ramp up production, you know, again, we can talk about that. We can, you know, get more exposure for the company. We're very unique. There are very few companies out there like us that are actually producing silver right now. And then at the same time, the exploration side is very important. We do want to do a lot of exploration over the next few years, both at Bethania and in Canada at Silver Kings. It's important because that's where our growth is going to come from. We're not just satisfied with starting the mine up and, you know, getting to that initial run rate of 1.5 million ounces a year, which we're targeting for middle of next year, middle to or Q3 of next year. That's a nice starter, but we think we can make this a lot bigger, and exploration is going to be a key part of that. So we're located in a really great part of Peru in the central kind of silver, lead, zinc mining belt here, very close to Lima as the crow flies. Of course, we're up high in the mountains and Lima's at sea level, so it's not that easy to get there, but we do have roads, nice road, you know, pretty good roads right to site. The Bethania mine was in production up until 2016 before we restarted it this year. So there is a lot of infrastructure already there that we were able to take advantage of. Now, since we went public 4 years ago, we've consolidated a huge land package around the mine. It's now 4,300 hectares. of which our resource, which I'll show you in a second, only covers 15 hectares of that. Okay, it's only a little, basically a third of this property here is where we've drilled and where we have our resource. But we found silver veins all over the place, not just on our mine property, but also several other zones that I'll talk about. So we've now got a big district here, and it's just a matter of time and money, but from our cash flow to explore this, drill it out, and we could have multiples of the types of resources that we're talking about today. Here's our current resource. So you add those indicated and inferred together, you get about 14.4 million ounces silver equivalent. It is mostly silver. We get about 75% of our revenue from silver at the mine. So when if you own Kuya, you do have really good silver exposure, because we are focused on being a silver miner, not diversifying into gold or other things. Now here's a slice through the mine, vertical slice through the mine property. The entire resource is located in this triangle, red triangle here. That's what drilling we did back a couple years ago in order to plan the mine. So that's where the 14 million ounces is. We've actually made new discoveries since then on surface, veins that we didn't know about. More importantly, it's all open at depth. All of our deeper drill holes hit good mineralization, high grades, usually thicker widths as well. So we've got great potential to at least double this at depth, I think. And then again along strike, we found the extension of the vein system on the other side of the hill here, where we've got a cluster of other veins. So it's just a matter of, again, more drilling to connect this all together. And if you do that, you could double it at depth and then basically 4x the whole deposit along strike in terms of the resource potential. So that's the opportunity that we have at Bethania to go from, let's say, 14, 15 million ounces today to 50 or 60 million ounces. We have the potential, we just need to drill it, and that's obviously great upside because you're not paying for any of that upside right now with where the share price is. This is just some details on our development strategy. I won't go through it in too much detail. We are toll milling right now, so we decided not to build a plant even though we're fully permitted to do it. We got our permits in 2022. We decided to start toll milling. That saves us a lot of upfront capital, which we then can do. We can spend that later when we're ready to build that plant. In the meantime, we get production, we get cash flow right up front. So it's allowed us to accelerate the project by about a year and also save us having to raise $20 million to build this plant at site, which again, we will do. It's important that we do it because we want to get bigger, and in order to get bigger, we need that starter plant at site that we can expand onto. So it is part of our strategy, but it's not something we need to do right now, which is a great position to be in. We're pulling ore out of two different shafts, or two different adits right now. There's numbered 1 and 2 there, just showing you some of the mine details. The red or the pink color there is actually our higher grade ore. So we have quite a lot of that. That's over 20 ounces per ton equivalent. So very, very valuable material. All right, so the phase of the mine that we're looking at going through right now, phase 1 was basically cleaning up underground, making it safe for everyone to go. We did that early this year. Phase 2, get the first production out. We did that in May. Then we were basically stockpiling our ore at site over the North American summer. July, August, etc. Then we did our first sales of concentrate. We did our first processing campaign and sales in October, and now we're continuing to ramp up from there. We're looking at getting early in the new year, 100 tons per day. That would be what we call our phase 3, getting production from all three of the vein systems, and then phase 4, Q3 of next year, which would be 350 tons per day. At that rate, we would be producing about 1.5 million ounces a year. We're estimating about a $15 cost on that. So our cash flow or profit margin would be on the order of $20 million a year, or almost $2 million a month at that point. By the way, that's basically our market cap today. So, which I'll get to our cap table later. But All right, back to the district. Now I'm going to talk about some of the regional targets. We haven't done any sophisticated exploration here. It's really dead easy. The veins come to surface. We look for previous small-scale mining activity, and then we map and sample the veins, and we usually find there's a lot more that's still left there. This is the Tito, which is the one to the south. This is our favorite regional target right now because the grades are so high. About every third sample we took on surface was over 1,000 grams per ton. So that's more than double our average mine grade right now. So it's very, very high, nice grades. And it's a big system. It's more than, sort of a kilometer east to west, which is similar to the size of Bethania. So if we think we can get 50, 60 million ounces at Bethania, we could have the same thing here. Haven't drilled it yet though. Carmelitas is the other one. We kind of split it into two separate deposits, but they're related. They're on parallel faults. And then if you sort of stack them back to back, which we've done on the bottom squares there, you can see that the strike length of these two deposits is about the same as the Bethania mine itself. So again, potentially another 50 million ounces here, ready to be drilled over the next few years. There could be a lot more on our properties. We just haven't, we haven't done much regional exploration other than going and looking for past mining activity. Okay, lastly, let me just wrap up with our second project in Northern Ontario. We've been very successful with the exploration here. We've really cracked the code on discovering these silver veins that have really mystified people since probably the 80s. The last mines here in this camp closed in the 80s. But in the early 20th century, there was a huge silver boom here. Thousands of people moved up to this area from Toronto and Montreal and came up from the US even, and were mining silver here in the early 1900s. Again, it had gradually consolidated into fewer and fewer companies, and then, as I said, the last mines closed in the 80s. We've gone back here, rethought the exploration, and we've been successful. This is the northern area where we're focused on. We made our discovery up here. This is where most of the mining took place on our properties, at least. This is the town of Cobalt, Ontario over here. Produced 300 million ounces, over 300 million ounces just from the town. Another 60 million ounces just from this bottom of the south shore of this lake here. We found a new deposit up here. So we call our discovery the Angus vein. This orange unit, which is basically spreads over this whole area, it kind of covers the silver up, and where it was eroded is where they were able to find the silver veins sticking up right out at the surface. Those have all been found. We're not looking for those anymore, because again, we think they've been found. But where this orange unit is still on surface, below that, there's potential for silver at depth that would have never been found 100 years ago. And we proved that to be the case. This was our discovery area. This is now a cross section through these rocks. We drilled through 200 meters of barren diabase, it's called, this orange rock unit, to get to these veins down here. When we hit it in hole 8, our discovery hole, 15,000 grams per ton over 3.34 meters. So that's about 10 feet. 15,000 grams is 1.5% silver. It's it was the second best silver drill hole in the entire world last year by metal content, and definitely generated a lot of buzz for us. We've since followed it up with a number of other good intersections, and we're still drilling there today. So you can watch for more news from this particular area, which is called the Campbell Crawford property. And what we're finding is there's a whole swarm of veins there. And where these veins intersect and jog, that seems to be where they blow out into these wider zones. So, 2 projects on the perfect part of the Lassonde curve. Lassonde curve was created by Pierre Lassonde, mining billionaire back in the 90s, to basically describe over the life cycle of a mine where you make the most money. And you make it when you go into production and when you make a new discovery. So that's basically where we're at with both of our projects. Lastly, our shares outstanding, so just over 100 million shares. We're at about 20 cents today, okay, so 20 million US market cap. And as I said before, that's that's about how much cash flow we'll make from the mine on an annualized basis once we get to that initial production rate. So we're very cheap on that basis. We should get a very big re-rating over the next year as we get that production going. We've got some big shareholders, great shareholders like Crescat Capital out of Denver, big mining fund, also high management ownership, including myself. That's basically it. I won't go through the bios. You can do that on your own. We've got, this presentation's on our website. I also have a few hard copies here if you would like one to take away today. And I think you all have the one pager. So
David,
do we have time for questions?
Could you go back to slide 6? I just wanted to
Sure.
see if you could talk a little bit about kind of your plans to expand
Sure.
Bethania and maybe, kind of put some timeframes to some of these.
Sure, great question. I also get the question like, you're going to make so much money, as you ramp up the mine, what are you going to spend it on? So it's kind of the same question because it's going to be spent here. So our first priority is to start doing some exploration. Why? It's not that expensive, right? Once we get to about $1 million a month run rate, I can take $200,000 or $300,000 a month and start putting that into exploration. And that's what we would like to do. So once the drills start turning at Bethania, I think they're never going to stop. We have so many targets. But the main Bethania zone is our top priority because it's just we know it's there. We're going to put drills underground first actually, and drill from underground, and then that way we can get that deeper portion of the mine. Any veins we drill at depth immediately become part of our mine model, right? So they essentially, become part of our cash flow forecast right away. So it's really good, really high return on our drilling money. Then we go to the hilltop zone, which is actually the Bethania extension to the west, to the east, where I said I think we could 4x our resource just because of the strike length there. And then Carmelitas and Tito, which are our regional targets, that would be the next priority after that. So that's sort of where we're going to spend our money. I would say we'll be drilling at Bethania as early as Q2 next year. And then maybe, get to Carmelitas Tito by the end of next year or early 2026, depending on how successful we are at Bethania. Yes?
So you did answer one of my questions, future question. So you do spend some of it for reinvestment, but is there a portion that stays in stockpile for better prices in the future, and B, what portion may or may not go directly to market for sale?
Well, I think that's sort of something we can look at as we get more production, which won't be until the second half of next year. Like basically what you're saying is, would we withhold production for higher silver prices, right? And when you're starting up a mine, you need every dollar of cash flow. But as we get more and more production, then we can start making those decisions and look at the market and decide if we want to withhold some. The other thing we want to do is build our own mill, because in order to get to 5 million ounces a year, we gotta have our own mill. We can do 1.5 million like we're doing right now. We can do that using toll milling, essentially renting other people's mills, but there's a limit how much we can do, because that's all trucks on the road with our ore going all over the place. So we want to do that at site. That's going to cost us about 20 million to build that phase 1 mill, and then probably we'll expand onto it in the coming years as well. And so we want to put aside some cash flow for that as well. Yeah. Any other questions?
Well, just on the head grade of what your toll mill production.
Yep.
So the head grade is what, 429 grams per ton, and you've shown some slides here where you're talking 15,000 grams per ton, and on this all-in sustaining costs are about 985. When you're thinking kind of the lifetime here, what kind of numbers are you kind of thinking for the profile of the project?
Well, we think at Bethania that it's probably going to be in that 450 gram per ton equivalent range. You know, I think our indicated grade is more representative of what we're actually getting from
Right,
mining than the
right.
inferred. The inferred tends to be undershooting just because of the way they estimate that. So, so I think our grade will end up getting higher. And I mean, anecdotally, and then, you know, we're mining right now. We're actually, you know, seeing higher grades. So than we expected. You know, some stopes are going to be higher, some are lower. They're not all the same. That's the way vein mining goes. But no, it's been very good. And at 450 grams per ton, you know, as I said, we have very low costs. The 984 cost, by the way, that is that's with our own mill. That was with our own mill site. That's from our PEA. So our costs are going to be another $3-4 an ounce higher than that because of the toll milling costs. So the cost to truck it and rent the mill. But it's worth it, right? Exactly. $30 silver more than pays for it. Yeah.
Thank you. Well, thank you very much, David.
Okay.
Really appreciate it.
Thanks everyone.
With more than 6,000 small and micro-cap companies listed, if you're looking for the next Apple, then Channel Check truly is your trade. It's an investor community where you can access independent Wall Street research, advanced market data, balanced news, corporate videos, and podcasts. You can even register to attend in-person Meet the Management Series luncheons, and to be part of the preeminent annual Small and Micro-Cap Investor Conference, NobleCon. And here's the best news. Since Channel Check is sponsored by the featured companies, premium membership requires no investment. It's absolutely free. So check it out. Log in today. Find out why Channel Check is North America's leading source of research on the companies that just may change the world.